Okay, good day everyone. This is Capitaland Ascott Trust FY 2023 annual report. Right, and this information is valid as of 31st December 2023. Right, today's date is 20th October 2024. Right, the reason for the big gap is because this is the first time I'm looking at this trust, so I wanted to have a look at its annual report. Right, so just bear in mind that all information presented here is as of 31st December 2023. Right, so CLAS, which is Capitaland Ascott Trust, right, its objective is to invest primarily in income-producing real estate and real estate-related entities such as service residence, rental housing properties, student accommodation, and other hospitality. Right, it's all over the place. 45 cities, 16 countries, 106 properties. Alright, and in gateway cities. Alright, so what's unique is that it's a staple group. So there's two parts to this entity. It's not exactly a REIT, right? It's actually a REIT combined with a business trust, right? That's why it's not called Ascott REIT, right? It's called Capitaland Ascott Trust, right? Because there are two parts to it. Right, anyway, the numbers look decently good, right? 16% year-on-year increase in DPU, right? Distribution per staple security basically means per share, right? Then 23% year-on-year increase to $148 revenue per available unit. Right, they bought some properties, they sold some. Right, they tend to sell mature ones, and they sell above what's the valuation, so that's a good thing. Right, so some AEI will discuss later. Right, they have a very high rate of debt effectively on interest rates, so I think somehow they do something to fix their interest rates. Right, interest coverage ratio is not too bad at 4 times. Right, this is actually quite strong. Right, but I haven't checked whether they got perpetual securities or not. So if they don't have perpetual securities, this is very good. Right, I'll do a follow-up video to see what's their more recent balance sheet like. Right, gearing is okay-ish, right? 38%. Cost of debt is 2.4%, right, which is quite low. Right, anyway, we look at their performance in the last 5 years, right? So this is why I wanted to look at annual report and see the long-term trend. Right, from COVID years, the revenue has already recovered, right? So 744 million, right? In 2019, only 514 million. Right, but you look at the DPU, right, it hasn't recovered. So I wouldn't consider the performance very good. Alright, so here is clearly affected by COVID. Here is the recovery. Right, you can see same thing, affected by COVID and trying to recover, but this is not at the 2019 level yet, so hopefully there's more upside to come. Right, again, NAV is very fluctuating, nothing much to say about that. Right, market cap actually shrank from 2019. Right, Chairman is very optimistic, but I'm not sure the performance is that great because this is a bit outdated. This is of 31st December 2023. Not going to talk about it too much. Right, so here they talk about the divestments. They tend to try to divest optimum. They have passed the optimum life stage, and they try to buy new properties. Basically, they're saying they have some alpha in selling and buying. Right, so you can see all above book value, right, which is quite impressive. Yeah, what to look forward this year, right? Some economic growth and projections. This one will cover later on, right? Not so worried about it right now. Okay, divestments, we discussed it all above book value, which is a good thing, which means that book value is probably underrepresented. Right, so this is what they invested in. Right, I think all properties in prime locations. Right, not going to say too much about it. Right, so they say, yeah, the EBITDA yield is 6.5%, so and so forth. Right, yeah, turnkey properties. Yeah, so basically they also acquired two turnkey properties in Japan. They are quite big, I think. Later I'll show you the breakdown. Right, so turnkey properties are properties that can just buy and immediately rent out, as opposed to some of the properties they have to buy and do AEIs, right? So they have to renovate the properties, which takes time and obviously doesn't bring in income. So I guess turnkey properties are good in that way. Right, so the AEIs, I'm not going to cover too much also. Right, so these are timeline of the AEIs. Right, so just to look at when they are finishing. Right, so it's quite spread out, so I can't really see a trend to say when there will be a nice boost to DPU, except maybe at end of quarter 2 2024. But I'm not sure what the size of this thing is. Right, so don't take what I say for it. Don't just invest based on what I say lah. Basically, what I'm trying to say is that, yeah. So anyway, stable income based from longer stay lodging, 25 to 30% of their assets, right, and the rest is travel lah. So this is the part that this is the reason why I never really look at this REIT, because I really feel that hotels, right, tend to be very cyclical, right, depends on the economy, COVID, so on and so forth. It tends to affect this very badly, right? So assessed by geography, you can see that Japan is big, Singapore is big, I think US is quite big as well. Alright, sorry, yeah, US is big. Yeah, so they have some income that is fixed and then with variable components, so on and so forth. Alright, but I don't think there's too much interesting things to say about this. In fact, when I look at this chart, I think the longer stay period has dropped from 14 to 8%. Right, so not really a good thing, right? Probably because the expats are not staying so much, or they are shortening their terms of lease with the residences, right? So yeah, not too much to say about this, right? This projected recovery, nothing much to say again. Yeah, this is what I wanted to show. What's their Asia Pacific exposure like? Singapore is the biggest in Asia Pacific, I believe, right? 1.3 billion, followed by Japan 1.2 billion, very close. Australia 900 million. Then you see all these very small, less than 250 million. So I had to sort this out in the annual report because it was very confusing, right? They put it all over the place and I didn't know what to make of it. So clearly in Asia Pacific, right, these are the three markets that are important, right? Singapore, Japan and Australia, right? Then these are peripheral, I wouldn't worry too much about it. Then UK is quite big as well, 890 million. France is 570 million, smaller already. Then you can see again the peripherals, right, of which Germany is the most significant, but it's only 250 million. Alright, US is quite big, right? I think roughly the same as Singapore. So this is their debt by currency profile, right? They should benefit from the drop in interest rates for SGD and USD debt, alright, assuming they keep their currency in that denomination, right? Yeah, so that's all. This is just a first glance at their annual report. I just wanted to have a look and I wanted to share it, right? Please note that none of this information is definitely correct, so please do your fact check, alright? And obviously it's not financial advice, right? So thank you for listening.